has released loan limits for NBFCs disbursing loans for housing needs. Brokerage DAM Capital also has a bullish view on Aadhar housing finance in the back of its peer-leading granularity and sourcing channels. Who's the MD and CEO, Rishi Anand of Aadhar Finance, now joins us to discuss this itself. Thanks a lot, Mr. Anand, for joining in, and happy new financial year to you. RBI increasing loan limits for housing. How do you view this? What does it spell for you? What's your average loan ticket size? And how does this increased limit change for your average, in terms of business prospects?
Great. Very good morning, Mangalam and Nigel, and happy new financial year to you guys too. So one clarification, RBI has not revised limits. RBI has revised limits of priority sector lending. Erstwhile, if you recall, the breakdown was between metro and non-metro, metro being up to 35 lakhs, non-metro being up to 25 lakhs. Interestingly, this time around, they have linked it to the population size. So cities with population greater than 50 lakhs, the revised priority sector limit now stands at 50 lakhs. 10 to 50 lakh population moves to 45 lakh priority sector limit, and population size below 10 lakh becomes 35 lakh. So it's an interesting move. I think it's a long pending request that the industry has been posing to the finance ministry and to RBI, and finally we've got it. So it is going to be interesting as we move ahead. The impact of it will come over a period of time, because now, for example, in the previous Avatar, loans in Bombay, Delhi kind of locations up to 35 lakhs were allowed under priority sector, and we had those limitations on as a housing finance company. Now I can go up to a 50 lakh loan and it will qualify under priority sector limits. So it's an interesting move, while the impact will happen over a couple of quarters.
All right. Hi, Rishi. Good morning and good to see you, Ben. Well, I'm looking at a DAM Capital note, and they are quite positive on your prospects and the prospects of your company. So that's good on you. Let's get a few more details out of you. Currently your AUM, I think, is around 24,000 crores. What kind of a growth trajectory, say if you give an average for the next few years, what should be the rough number we should be looking at? And also, if you could tell us in terms of your mix, your average ticket size currently is around 10 lakh approximately. And also, if I look at the mix, housing accounts for around 75%. How do you see the mix changing going ahead? Ticket size as well as mix, and what is the AUM growth we should work with?
Great. So good morning, Nigel. Yes, you're referring to the DAM report. Let me give you some further insights. In terms of growth, given our book size, we are 24,000 crores as last reported numbers. We've always indicated that in the short term, and when I say short term, it is 0 to 3 years, we will grow at the rate of about 21-22% on AUM, and we maintain that stand even as we speak today. 3 years hence, when our book size becomes larger in size, I think the right number to look at will be 18 to 20% on a larger book. So that is the kind of growth trajectory we are speaking about. You spoke about 75-25 being our home loan and non-home loan. What the regulator allows you is a principal business criteria of 60% on the balance sheet. If I translate that into pure, home loan, non-home loan, it stands at about 65-35. But we don't want to be closer to the breach point. Hence, this 75-25 in the short to medium term will be maintained. Now, let us say I incrementally source more non-housing loans, then we have a mechanism of doing direct assignment under the priority sector limits to the larger banks and larger housing finance companies. So at the loan book level, Nigel, I will maintain 75-25 even as we move ahead.
What does that mean for your spreads? Right. So what does that mean for your spreads, NIMs, as well as yields? Because the mix remains the same. There is expectation of a rate cut by the RBI. How does all of this impact your spreads and yields?
Okay, so before I move to spreads and yield, Nigel had a question on my ticket size. My current ticket size on the AUM stands at 10 lakhs, Mangalam, and as we move ahead, my incremental ticket size today on the disbursement that I would be doing quarter on quarter is 12.5 lakh, and I don't see any reason why there should be a substantial jump in ticket size. Whatever inflation-related jump and cost of construction increase jump would happen, which will be linked to inflation. So that is the kind of increase in ticket size that we see. We don't foresee change in segments or moving to higher, greater ticket size. Now coming to spreads in the rising as well as in the falling rate scenario. The good part at Aadhar Housing Finance, Mangalam, is that almost 70% of my asset side and almost 69-70% of my liability side. So, sorry, if I can change the number, it is 80%, 79, 80% on the asset and the liability side is floating in nature, which effectively means that whatever comes in, which eventually passed on to my consumer on both northward as well as southward. So will my spreads and NIMs get impacted? No, they will not be impacted at all.
So what band should one work with over the next near to medium term? Because you do give us growth trajectories for 0 to 3 years and thereafter. And now as we speak, what is the rough spread band that we should be working with?
I think today at the book level, we are at 5.8% spread, and I don't see any reason why it should fall. But at a stable state comfort level, anywhere between 5.6 to 5.75 is the spread that we would be wanting to maintain.
And NIMs, that would mean NIMs would hover around 9%?
Yeah, hover around 9%. That's right, Nigel.
Okay, all right. Since you as well have had a brief look at the DAM capital note, they are talking about your ROE staying in the vicinity of around 16 to 17% for the next 2 years. That's till FY27. And then they're saying there's a possibility it goes to around 19%, 18% or thereabouts. You agree?
Completely agree. I think if you look at pre-raise, pre-IPO, we were already touched 18.5% ROE. With the capital coming in, obviously the impact of capital, we are at about 16% now. And 2 years down the line, we should be back to 17.5%, 18%.
What about your capital consumption? Would you, at the current growth rate that you're at, require to raise any capital from the market?
I don't foresee any capital raise as we go ahead, at least 3 to 4 years, Mangalam. But maybe 3 years down the line, we will have to take that call. For now, sorry, the kind of capital adequacy ratio we are sitting on, I don't think 3 years we would need any capital at all.
And a comment on asset quality, because credit costs are, about 25 to 27 basis points, nothing really to worry out there. Do you foresee any stress, or do you believe that this will maintain?
If I were to look at the last quarter reported number, 1.4%, and every year March is the critical quarter for the financial services, for the housing finance industry. As I have already indicated a couple of times on your channel, 1.1% kind of GNPA numbers is comfortable, which will translate to about 25 bips of credit cost. I don't see any reason why there should be an increase in asset or deterioration in the asset quality at all.
Okay, all right. Thanks a lot, Rishi, for joining in. You're sounding reasonably optimistic about business. AUM growth in the ballpark of around 20%. Spreads at around 5.6 to 5.8%. NIMs at around 9%. And you don't require to raise any more capital for the next couple of years. You're adequately funded with the ROE scaling back to around 17.5 to 18%. Thanks a lot for joining in. We look forward to having a chat with you at the end of your Q4 numbers as well.
Good day to you.
Good day to you as well.